My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Another great episode today. Zooming in from beautiful Dallas, Texas, we've got a very experienced real estate syndicator who's got a lot of experience in multifamily as well as self-storage. Joe Pizzurro is zooming in, and we're going to be talking about something different, something new, something that I have no clue about. We'll be touching on how both fractionalization and tokenization of real estate assets using blockchain technology is something that Joe's involved in. And that was a whole bunch of big words I really didn't understand. So looking forward to that. Joe, welcome to the show. Great to have you.
Thank you. Thanks for having me.
So give us a big picture snapshot of your real estate investing business as of mid-September 2024. What does real estate investing look like for Joe?
Yeah, so we've got our portfolio a little bit, maybe differentiate ourselves from some other syndicators. We have both self-storage and apartments.
Yeah.
We like to diversify, and something we're about to launch is a fund where investors can invest in our portfolio and be diversified across asset classes.
Nice.
And the reason we like both is there's pros and cons. The storage is less expensive to acquire, smaller capital raise, easier to maintain.
That sounded like a lot of pros right there, man.
Yeah, and a better cash flow.
Yeah.
And then the apartments, of course, a better depreciation, tax savings, and you're able to secure a little bit better loans with the agency debt. So we have best of both worlds.
Yeah. Okay. Well, that makes a lot of sense. Yeah. I was waiting for what's the big pro to the apartment buildings compared to the self-storage, but yeah, the depreciation, that makes a lot of sense. A lot of people do very, very well with that. Very cool. So what does the portfolio look like today? How many units? Maybe we got to divvy them up. So when it comes to the apartment building side of things, how many different communities or buildings do you have in that portfolio, more or less? How many units?
Yep. So we've got a total of about 15 properties. 13 of them we're a general partner, and then a couple as just a limited partner. Over about 35 to almost 4,000 units of self-storage, and then about 500 units of apartments.
Very cool.
Obviously, the storage units are easier to accumulate.
Yeah.
But yeah, we're sitting right at about 100 million of AUM.
Very good. Congratulations. And how long ago did you get started in the whole space?
A little over 4 years ago.
Wow, that's not very long to build up a
Yes.
significant business. Congratulations.
Yeah.
What was life like for you before? What were you doing beforehand, Joe?
I'd done a couple of single family and dove straight into multifamily. Started with multifamily, then added on to storage. Prior to that, my background was mostly project management, which has translated nicely to, because essentially these things are projects, and we have scope and budget and schedules, and it's
and you're one of those organized kind of guys that
yes.
keeps everything up. Well, that's huge. I mean, I struggle with that a little bit myself sometimes, so I appreciate people that are good at managing projects. It's a huge skill set. Well, hey, that is really outstanding, Joe. That's fast growth. What would you say have been some of your biggest learning experiences throughout the journey so far? Like growing that bigly, that big, that quickly?
Well, I think one thing I decided to do differently is stay away from. I have one investment in near Houston, and all of the rest are DFW, and the DFW are doing great, and the other one is not as great. And it doesn't mean there's people who have done very well there, but I don't know the market as well as maybe someone that lives there. So I'm going to stick with what I know going forward and
Yeah.
stick
So
with the
you live and you invest in your own backyard, and
Yep.
you're very, very narrowly focused on that at this time. Any
Yep.
plans to change that moving ahead, or that's just what's
Yeah,
working?
I started looking in Florida.
Hmm.
Um, I like the Florida market, and I'd like to get to learn it first.
Hmm.
But that's something I'm looking at. I'm actually going tomorrow. So
Yeah. Very, very cool. All right. So we talked about a bunch of big words at the beginning that got me really confused really fast. So explain to me um, how you guys are exploring fractionalization and tokenization when it comes to raising capital, or again, I'm maybe break it up for me. What does
sure.
that even mean? How does that involve blockchain technology? How do you like, what does that all mean, man?
So what we're actually looking to do, and a good friend and partner of mine is developing a software that will support this. Um, it's actually the tokenization of securities. So let me just backtrack. What we do with the syndicate, we raise capital from investors. Um, that goes into a company, an LLC, and the LLC owns the property or properties,
Mhm.
and each investor has a share of ownership. It's almost like a shareholder, right?
Yeah, that's the
Uh,
traditional way of doing a
right.
syndication. Yeah.
And so what we can do is tokenize that equity and fractionalize it. So what we're doing is the investor can choose to have their share of ownership traditional way or as digital tokens. And what they could
So
do with
for us dinosaurs, maybe tell us what a digital token
sure,
is.
like Bitcoin, cryptocurrencies. So we would create a currency that represents the equity for the property, and you would get your share of ownership in the form of the digital tokens in a digital wallet. And what you could do, so for example, traditionally, if you want to, your money is not technically liquid during a hold period. You have to wait till there's some kind of transaction, a cash out refinance or a sale. There are ways that there are some ways that get your money out, but it's very difficult, right?
Yeah. Okay.
Um, it's very easy with and flexible with tokenization because you could actually take your tokens and sell them on a exchange during the hold. So if you needed some liquidity, you could also sell them to other investors within the same deal. Um, other investors, sometimes there's a lockout period where you can no longer raise any capital and you can no longer accept new investors. But with the tokenization, you could actually get a new investor in if they buy some of the tokens from someone that's already part of the ownership. So it's very flexible
Hmm.
and more liquidity for investors. And so we would like to be able to bring that option to the table when doing syndications, going forward.
So what's the difference between that and fractionalization?
Fractionalization is essentially just exactly that, but it doesn't necessarily have to use blockchain. You could technically do that even today without blockchain in some of these REITs where you can buy part, you can invest, $1,000 with it, you're right. And instead of having to do a minimum 50,000, 100,000. So that's also what we would like to be able to do to widen the investor pool.
I
Uh,
see. So the fractionalization is basically a way to almost crowd fund, for lack of
right.
a better term, just to get my pea brain around this. And the tokenization is a way to create your own little Bitcoin, which represents
Essentially.
your equity in the
Mhm.
deal, which you can then buy and sell to other
Mhm.
people, either within the deal, other investors within the deal, or people outside of the deal that want to get in. And you can liquidate or you can sell part or all of your equity that way. Am I understanding that correctly?
Exactly. You said it.
Okay, very cool. So I'm just thinking because I got my ass bit with Bitcoin a few years ago when it was, you know, riding high, and I jumped in and then it crashed, and then wherever I was holding my Bitcoin evaporated and my Bitcoin disappeared into the atmosphere. So I'm very skeptical about these things. I'm a dinosaur. So what like for dinosaurs like me, when you're explaining this, I kind of get the benefit of the flexibility. What's the downside?
Really, I think it's very almost the same thing. It's just you that bridging the gap of communicating it to people. Because like you said, sometimes the crypto word it scares people right away, you know.
Yeah.
But really, it's essentially the same thing as instead of a piece of paper, you're having a digital version of your shares.
Okay.
Um,
That's
and,
that's
and
a
and
more
they're
understandable.
backed by the real asset. So
So
that's the
one
difference.
of the
Yeah.
challenges with some crypto, if I understand correctly, Joe, is the valuation can fluctuate
Mhm.
dramatically. Is that different with this tokenization? Is it more of a stable, steady Eddie kind of thing, or
Yes.
is it
So what we would have to do is either quarterly or on some basis continue to value the property and update the value of those tokens.
but it really is based on the value of the property. It's
Correct.
not based on
Yeah.
free market
Right.
of our own create unique little Bitcoiny thing that are
Right.
tokens. It is still based on the value of the property. Am I
Correct.
understanding that? Okay. All right. Thank you very much for kind of I'm still confused, but much less confused. No, I kind of I'm getting the gist of it. I can see the advantage for sure. And then fractionalization is similar, but it's not a little mini Bitcoin. It's basically slicing and dicing the shares up into a
Right.
gazillion pieces instead of the bigger blocks of shares that are typically
Right.
involved in
And
something
just widening the door to allow more investors to participate.
with lower amounts.
Exactly. Yeah.
Yeah. Now, do they still have to be accredited investors, or does this open the door to
It depends
everybody and anybody?
how you structure it.
Yeah.
Even now, you can structure an offering a certain way to allow unaccredited.
Yeah.
Um, so it just would depend on the SEC, um, the way you decided to structure the deal.
Very cool.
Yeah.
Well, it sounds like you got a lot of experience with raising capital because growing your portfolio this big, this fast involves a hell of a lot of cash. So, how did you get started with that? Coming from the project management space, getting into real estate, doing a few single families, and jumping right into multifamily. How did you get started with the raising capital side of things, Joe?
So that to be honest has been the most challenging, and especially the last year and a half.
Yeah.
A lot of investors are, and rightfully so, they're um, uncertain of the near future, and for different reasons, and are waiting to see some signs of what's happening. And so it's not, there's still people out there, but not as much as a couple of years ago.
Yeah. It's
Uh,
not the Wild West like it was a few
right.
years ago. Everybody
A,
was
a few years
jumping.
ago, everyone's just throwing their money as quick as they can at real estate.
Yeah. And unfortunately, there were some not so experienced, in a few cases, unscrupulous syndicators and sponsors that kind of screw things up for everybody else too.
Yeah. Yeah.
Yeah.
And so, and there was the whole bridge loan. I don't know if it's right to call it a bubble, but
Mm,
a lot of those bridge loans were coming due this year and next year and are in trouble.
yeah.
So hopefully we can get past that and back to fixed rate debt and longer holds, a little bit longer holds. And but get to answer your question, it took a lot of networking, a lot of you know, putting myself out there like things like this,
Mhm.
letting people know what I do and how I do it, what sets me apart, and just getting out there and growing my network.
Yeah. Yeah. That's a big part of it. I'm naturally kind of introverted. So it's a challenge doing those kind of things, that's for sure, but it's what you need to do for sure.
Yeah, yeah.
Yeah. No. So what are the plans for the next year to 18 months, Joe?
So another thing I didn't mention, we have just stepped into the process of vertical integration of our company. So we have our own now in-house renovations and CapEx.
Nice. Yeah.
So that's, gonna allow us to not have a dependency on third parties. And there's obviously some cost savings and efficiency there. Um, and then eventually in the future, we might look at property management as well. But for now, we are very happy with our third-party property management. They're doing a great job for us. So
Do you use third party for both the apartment side as well as the
we
self-storage
do.
side? Yeah.
Yes. Different, of course,
Yeah.
different. Yeah. But I don't want to be in the business of self-management. I trust the professionals to operate the
Well, I'm
property.
simply, yeah, let you folk. That's part of the reason you've been able to grow so quickly, so fast, is you're staying in your lane and you're finding good people to help you out with the other stuff. That makes a
That's
lot of
right.
sense. Okay, very, very cool. A little bit backtracking, but curious because you're working both apartments and self-storage.
Mhm.
Is it still true today that the amount of rent that you can generate per square foot for self-storage is approximately very, very similar or the same as what you're getting for apartments? Have you seen that to be true, or am I
Uh,
intellectual on that?
well, the differences are for self-storage. It was funny when you heard me earlier, there's so many pros to it. You don't have staggered leases of 12 months. You can raise rent on everyone at once, versus apartments that takes a good year to raise rents completely. Um, there's differences, of course, but the other thing is raising rents on storage is easier to handle for the tenants, right? They might be paying an extra $10 or extra $5, but that goes a long way for the property.
Mhm.
On an apartment, it could be a couple $100 a month, right? That maybe not as easy to swallow for
Yeah.
tenants. So the rent increases are usually easier to do on the storage.
I guess what I'm trying to ask is, I've heard people in the self storage space say one of the big advantages is, in a lot of cases, you got a tin box, which is the facility with concrete slab. You don't have to worry too much about plumbing. You don't have to worry about
Toilets.
finishings. You don't have to worry about any of that kind of stuff. And the amount of rent they're generating per square foot is very similar to the amount of rent
Okay,
that's
yes, I
being
see.
charged for an apartment in the same city per square foot. If you,
Right. No, that is true. And then one other thing is even in secondary and tertiary markets, storage is pretty resilient. Whereas you might see a difference in apartments. For example, I'm not going to try to buy an apartment in a tertiary market just because I feel more confident in a tier one
Mhm.
market. But for self-storage, I will.
Interesting. Interesting. Now, I'm up here in Canada, so it's a slightly different scenario. But a few months ago, I went down for a little trip into Washington State, and
All
I
the way down
was,
south to Washington.
yeah, down south to Washington,
Those Southerners
up north for you guys. That's the boondocks. And not only that, but I was in the northern part of Washington State, so kind of quite rural. And I was blown away by how many self storage facilities there were for what appeared to be a very, very, very small population base. And I was talking to a few people, and it seemed like it was, in that area, kind of saturated. Are you finding any challenges with saturation with self storage these days?
Yes,
Mm,
and I try to stay away from those areas.
of course.
Yeah.
Yeah.
To be honest, what's looking good lately are somewhere nearby water, like a lake.
Oh,
It has a boat and RV storage on the property,
smart. Yeah. Yeah.
and a little bit away from the bustling city where there's tons of competitors on every corner.
Mm,
Those are seeming to work out pretty nicely. So,
very cool. I was interviewing another self-storage investor a few weeks ago, and something that he said was very interesting for me was that years ago, the typical self-storage client was like a middle class person with just too much crap in their house and needed a place to put it, and they parked it there and kind of forgot about it and hardly ever went to the storage facility. And he said he's seen a big shift over the last few years, and now it's a ton of millennials and Gen Xers and younger people who are using self storage because they're living in much smaller
mhm.
living quarters, like small apartments, or they're renting by the room and they need extra space to stow their, you know, wakeboard and their
Yep.
skis and their stuff. So, and they're in and out of that, their bikes and all that kind of stuff. So they're in and out of the storage facility once a week kind of thing to get
Yeah,
access to their stuff. Have you noticed that shift yourself?
absolutely. And they're using it as like a garage because they,
Exactly. Yeah.
yeah, and they're very active, using it.
Yeah.
Yeah, no, I think that's they help each other out. The more apartments, I think what's happening lately, people aren't able to afford homes
Yeah.
because of the interest rates. They're renting apartments and therefore needing storage because of that.
So you get to double dip.
I guess you could say that, right?
That's awesome, man. Hey, Joe, this has been a lot of fun. Thank you very much for your insights. Thanks for explaining to an old dinosaur like me what fractionalization and tokenization means. I have a much better idea of it. And congratulations again on the growth that you've had in the last 4 years. That is mind-boggling. So keep up the good work.
Thank you. Pleasure.
Yeah. Now, if people want to connect with you, where should they go?
My website is breakchaincapital.com. And so on there, you can find my contact info and look at our portfolio and find out more about us.
Awesome. Very good. All right, everybody, take care, and we will see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.